Alright. What is going on, family? Who's ready to do some money making today? We see GameStop popping off. We see a lot of the stocks popping off today. We're ready for growth. We're going to go find some companies that no one else is talking about right now because everyone is all blinded by the shiny objects. They'll find our companies eventually, and when they do, we're going to cash the fuck in. Per usual, if we making some money up in the chat, give me a 1. If we are neither red nor green to start the day, give me a 2 up in the chat so we can send this puppy green for you. And if we have started the day with red, give me a 3 in the chat so we can send this puppy way north for you. Let me know what stocks we're in. Let's take a look at them. Oh, Maven Marketing Group, Connor McNerney, George Lopez, great to see you guys as always. Appreciate the support. GME is going to the moon. Let's see. No, this stock is... Wow, look at that market cap. 20 billion. We got room to run. Why does GameStop have their earnings? George, you gotta make up your mind. You're either a 2 or you're a 3. They haven't had their earnings yet. When did they last file? Alright, 4 is just... 4 was none of the options, George. I don't know where you even got that from. Oh, gotta get good stretching. You never want to start making money if you haven't stretched. That's how you pull muscles. Last filing came in December, so they filed late, so they're going to be like an April filing probably for their annual. Let's see. Let's go back to last year. They filed their Q1 then. What's that over here? I can go over Macy's for you, Connor. Give me just a minute. Let me find when their annual was. 327. 2020 was their last annual, so we should be doing like 2-3 weeks or so. Maybe 4 weeks if they stretch it. I got a feeling they're going to want to stretch it because the earnings aren't going to look anything like what we see the share price suggesting. Well, actually, that might make their earnings good. We'll go over Macy's. I'm not going to speculate. We have some options. I think they're good play. So their last one was a quarterly report. We can go over that though. So we're about 3 months outdated now. Keep that in mind when we do this. Oh, what's going on, Brian Hacker? How are you doing today? GME is going to the moon. I'm going to pull this over here. Y'all know where I'm getting my numbers from. the sake of importing these efficiently, I need to get off my screen. Okay, let me get the most up-to-date Macy's. It's like 1676 is what I'm seeing. Their ticker's just M. Nice. Today, 1676. That gives us a market cap of $5.22 billion. Oops, that number belongs over here. Shit. This number, the last close was 1711, so a little bit down today. Oh god. How we doing? How we doing? I think this is Bryce, right? What's going on, Bryce? Put this up in here. Thank you as always, Savvy. Great to see you. How are you doing today, my friend? I was just watching. I mean, I love using Reddit. I was talking to my friend Connor this morning. They've got like live streams now on Reddit, so that you can, tune in with people around the world. Like I watch people like in Africa cooking breakfast. Pretty cool. But this morning I watched the fine folks of Wales. Someone driving around Wales. Looked like it was rainy over there. $17.11. Alright, let's look at our Q. I think this was a Q3. Yeah, this is Q3. Let's see our assets. These are going to be in millions. Okay. Assets. I don't want that. I don't need a consolidated balance sheet. I just need their balance sheet. Okay. Oh wait, this is an outdated report, I think. I love to hear that. I think their fiscal year might end in November. Yeah, their fiscal year ends in November. SCR. I'll take a look at that in 1 second, Bryce. Let me finish doing Macy's real quick. Let me know. This is Bryce, right? it's not Bryce, I apologize. I'll get your name right from now on. Alright, so we're looking at total assets in the current period, 19.24 billion. Previous year end, their year ended on November 2nd, 2019. No problem, brother. I will take a look in 1 second, Bryce. 22,547. So they went $3 billion backwards. Let's see what they did with liabilities, though. Oh man, I don't want to look at their. Oh, they make me do the math. Okay, hang on. Equals this. Well, we'll do that last, actually. Do the current ones. They just didn't give me liabilities. They give me currents, but they'll make me do the math for the rest. Oh, you're the man. Thank you, Bryce. I appreciate all the help. Current assets, we're looking at 7357. 3456. Billy. How about our current liabilities? We're looking at 6651. Billy. So we're a little bit under 1.2. We're not insolvent, but you know we're definitely playing with fire. And how about over here, shareholder equity? We're looking at a surplus. That's good. Tells us we're not insolvent. Previous year end, we were looking at way higher though. This is why they don't give you their liabilities, I'm sure, because they don't want to show you how much their assets have been reduced by and what little they've done about it to reduce their liabilities. This is Macy's. So this is going to equal this one. Oh no. This one. We're going to subtract it from. Subtract that from it. That's going to give us our liabilities. 16, almost 17 billion. And this one's going to be this minus U36. So our liabilities have gone up by 500 million, and our assets have gone backwards over 3 billion. So that's why our shareholder equity has fallen by $3.8 billion. Not good for us. I don't think I've done an NSTB. Let me write that down also. So I've got SCR and NSTB. I think I've briefly looked at it, but we can look at it a little bit further today. Preferred shareholders equity 0. Outstanding shares we'll find later on. This is for Q3. Yeah, this is Q3, I think. This is Q1. That makes sense. This is Q3, yeah. Q3 2020. Revenue. TAC 4712. How are we doing today? Make sure you toss me a like, please. Appreciate it. Thank you for stopping in. This is M. This is Macy's Savvy. All right, so that's the revenue. We did 3990. 1, 2, 3, 6. Revenue previous year, same period. This is weird. That much less revenue, same time period, same quarter. This is year to date. Year to date, previous year, same time period. See, we're way down over there. Down over $1 billion on the quarter in revenue, down over $5.5 billion on the year to date. Net income, our bottom line, we lost 91 million. And we lost, previous year we made 2 million. Oh, David Rodriguez, good to see you, my friend. How you doing today? Income, date. Oh wow, they lost a lot of money last year. And then previous year we made, and this is a consequence. We lost $4 billion, and we lost 91 million. We did, $1 billion less in revenue for that same time period, and we did, $5.5 billion less in revenue for this time period over here. Make sure this is right. Yeah, we did 5.5 billion less for this time period over here. You can see that right there. The reason that these numbers are so far in the red is because their revenue was reduced substantially, but they didn't reduce their liabilities. So their assets all got reduced by over $3 billion. We saw that earlier. Their liabilities, they didn't reduce those though. So they didn't chop, they didn't close stores. They didn't, really get rid of much. So our shareholder equity suffered. Their net income suffered substantially. We'll see their profit margins in a second when I scroll over. What I'm seeing is they didn't go into action mode, which is not what you want to see as a shareholder, Connor. Profit margin for the current quarter was -2%. Profit margin for the previous period, I'm going to go and extend these a little bit further out. Here you go. 2.28%, -2.28%, positive 0.04%, -38, almost 39%, positive 1.38%. So the company that was going to sell its stores to Amazon, and then realty income until they got bailed out, which is why assets down, liabilities up. Exactly spot on, Savvy. Appreciate that, David. GME is going to the moon. How does someone like you call yourself a value investor the only time? I own 2 shares of GME. That is not a position. That is a trade. If that was an investment, it'd be a different story. I'm not looking to take GME for the next 10 years. I'm looking to play that one. SNLD. I'll take a look at that one too. What's going on, Job? How are you doing today? I can take a look at SNLD very, very soon. Give me some time. I got a short list of requests ahead of that one. I got to go over SCR, which is a new IPO. SNLD. Is it SNLD or is it SNDL? Like, is this Sundial or is this a different company? I like the stock. And we'll save that. Let's get their outstanding shares so we can get some calculations in here. There we go. Outstanding shares. We're looking at, oh man, they're gonna make me math here. I don't like to math. They made this balance sheet was a pain in the ass. Or these income statements too are a pain in the ass. They don't give us the important numbers because the numbers aren't great. So they lost 91 million. And we're going to divide that by 0.2. So it's 313 million shares. Okay. There you go. Outstanding shares. And that's going to give us a book value per share. It's not going to be that great. $7.15. It's currently, if you're value investing, Connor, this one is currently being undervalued, per our typical standards. It's under 3.0 here. Book says that our shares are worth $7.15, even though things aren't going great for the company, even though it looks like they're going in the wrong direction. If you think Macy's going to have a big turnaround, you think they're going to have good earnings coming up in the next month or so, it could be a good hold for you. Let's see. Telling you, Savvy's always figuring out how to sell the top, and then he buys back in. All right, so that's Macy's. Let's go take a look at SCR, I believe is the next one. Oh, no, don't sell those ones. I don't know what you're in, but I think that you might have some more money come your way as things go back to normal, or as things, the economy goes back to normal. Let's see. Score Media. I don't know if they have any filings so far. Thank you, Bryce. I'll go check that out in 1 second. Let's type this in here. Beautiful. That is the best mindset you can have, Savvy. Let me go check out Discord for Bryce. Bryce, where did you post that? Oh, there it is. In my den of due diligence. Appreciate it, brother. Let's see the score. Oh, I used to have their app. Exposure to sports news, yada, 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 yada. Huge community on Twitter. Catalysts include fantasy sports, leading to people using the score as a news source or betting platform, and also legalization in the States and recently Canada is growing the market. Let's look at this. Let's see if they got it on their website. They might. They got a lot of monthly active users. That's a very important metric to track in companies like these. Okay, are these going to be, Canadian dollars. Okay. This one's going to take a second, folks, but I will do it. I'm up for the challenge. I got to end today, by the way, guys, at 12:45 Central Time. I've got a call with my father and his compliance department at 1 o'clock that I have to get ready for. See if we can get him on here on a panel so that you guys can talk to an actual financial advisor, which you guys said you would like to do yesterday. So we got that set up, talking to them at 1 o'clock, see if we can get them on here, see what we can discuss, what we can't discuss. But this way, you don't have to spend your time talking to an online marketer. You're going to talk to an actual financial advisor, which I think would be super valuable for y'all. that's still a maybe. It's still dollars. It's better than the new Taiwan dollar that I had to convert like a week ago. That sucked. I don't know what sector would I say that they're in. Software? No. Digital media. That's a good description. Let's update this stock. Take the most updated date. 2743 is what I'm seeing over here. Closed at 2751, so just down a little bit, not much. And that's a market cap of a little over $1 billion. Be a good buying and drops to 30. I flagged it at 14 and has gone from negative 20 margin to plus 22% margin. Fantastic. Let me ask you to look up the Korean company that hasn't IPO'd yet. Like, oh my God, are you quoting Dodgeball, Connor? Alright, this is gonna be, I'm gonna have to change these numbers, so they're gonna be off at first, unfortunately, but we will trek on. Okay, assets. These are gonna be in Canadian dollars in thousands. Okay. Total assets at the end of their fiscal year ends on August 31st. This is Q1 of 2020 for them. $50,000? Alright, so assets have gone in the wrong direction. How are liabilities? Oh my God, they make me do math here too. This sucks. Okay, so I need to go to shareholder equity first. 2 in a row. Don't like seeing this. Well, let's do current assets first. The Ocho. Current assets. 38 million. Current liabilities, 17,597. So that is healthy level of liquidity for sure. Total shareholder equity is down. I think we can just do the same. Let's just drag and drop. So our liabilities remained practically the same. They're up about $500,000, which is not a lot of money. We'll see what that is in USD. It's going to be a little bit more in Canadian. But you can see our assets have shrunk, so that tells me we've been taking some losses. Let's see. Well, if it's only been one quarter, we probably took a $10 million hit this quarter, if I had to guess. Preferred shareholder equity is 0. It's Q1 2020. Fiscal year ends August 31, 2020. the revenue. Okay. Alright, now I'll do revenue. This is for, because their fiscal year ends August 31st, 2020. This is technically their Q1 for, I believe, 2020, not 2021. Let me, I guess I could go check and duplicate this tab first. So I'll go back. Yeah, they're calling it Q1 2020. That's my bad. Good call, Bryce. Oh my gosh. Okay, there we go. Revenue. We're looking at 8539 $8 million. Revenues same time last year was $9 million, so slightly down. Year to date they don't have on there. Well, this is first quarter, so it's gonna be the same thing. Alright, net income for the period was a loss of $12 million. And net income for the previous year, same period, was $4 million. Interesting. Okay, so average shares. Oh, shoot, let me just repeat these really quick. God, these are tough to read. The profit margin's not looking great. And paste this in there. Total number of shares, we're looking at 363,000, or 63 million, sorry. 300,812. Catch up in here. Skier Sports Quarterly. The OSQ. Pasted a snapshot of a Motley Fool article in the Discord. Might be helpful to skim through that as perspective on SCR's financial. Okay, let me take a look at that too. I gotta do some converting over here also. Keep that in mind. So let's get to that. Start on these. 32 USD. Okay. That's how many Canadian dollars we have. Oh my God, it's gonna be a nightmare. Bear with me, folks. That's how many US dollars it equates to. This is how many Canadians we got. And this is how many USD we have. Liabilities, let's type it manually. We've got oh man, we're gonna have to get liabilities last, damn it. Okay, we can do this one. Boom. Oh, this will update the liabilities automatically. It's gonna be great. Okay. Shareholder equity, those numbers stay the same. These numbers are going to change. Alright, if you guys haven't already, please smash that like button, smash that subscribe button, and ring the little bell so that you can get notified every single time we drop a new video or we go live and we're making money up in here, which is every single day the stock market's open, folks. Even when we go through 2 weeks of red and everyone else runs under a rock and buries themselves. And all of a sudden they're back again. We've been here the whole time. We do not go anywhere. When you're scared, the market's red, the people you relied on have gone and they've hidden. Because they're scared too. We're the ones who are brave enough out here to weather the storm. Come join us. These numbers are going to be the exact same as those numbers. Boom. And boom, and boom, and bam. Profit margins all look the same. Beautiful. All right, and this gives us a, whoa. You don't like to see that, Bryce. Maybe I entered these numbers wrong. Hang on, look at the price. That's not good. So, I've never seen a price to book ratio this high, Bryce. Typically, you know, it's going to look something like these. I'll make sure that these aren't in Canadian dollars. Oh, wait, this is in Canadian dollar. Okay. So it turns out I didn't need to do all that. So we're going to need to take that number then, and we're going to need to convert that to USD also. It's going to be high still, but it's going to be a little bit less outrageous. All right, Bryce, you still with me? GME's going down. All right, Bryce. So here's what we're seeing. You know, it's going to still give you that same book value per share. I don't. I mean, the price to book is not looking good. The book value per share for this, you know, it's gonna the calculations right there. Total shareholder equity. There's no preferred shareholder equity, so you don't have to worry about that. So it's just gonna be our shareholder equity divided by the number of outstanding shares. We've got 300 million shares outstanding currently in change. So it gives us a book value per share of 4 cents per share. We're trading today at $21.68 when we started recording this. Which gives us a price to book ratio of 552. So anything under, if you know, just a reminder, anything under 1.0 is considered to be, you know, it's 100% undervalued. You know, our shareholder equity on paper is worth more per share than they're accounting for, than the market's accounting for currently. So it will catch up eventually, you know, if theory is correct. anything under 3.0 is there's a very high likelihood that it is being undervalued currently. Anything above 3, that's when it starts to get into the like 4, 5, 6 is typically like you're approaching fully priced if it's not already fully priced. But yeah, I mean 552. I've never seen a ratio this high for P to B. This would tell me that it's not only fully priced, it is completely overpriced right now, regardless of how good the company is. There's so many shares floating around, and they have such little revenue to begin with. They have such little assets. They have such little, their profit margin is going in the wrong direction as well. It's not looking great for the company. I mean, that was their last public filing, though. You said they just had an IPO, so that would infuse more money into the company. If they had the IPO, I don't know how much money that raised for them. That's going to get added to their balance sheet so that these numbers, the assets, are going to get updated. Do you know how much money they raised in their IPO, Bryce? Can you find that for me while I go on to the next one so I can, maybe talk through this a little bit further? All right, next one. Oh, NSTB is a SPAC, right? That was you, Savvy, right? Yeah. I think we might have already done NSTB then. Let's see. Yeah, Apex Clearing. I think I liked them. And this number I think has barely gone up since we did it too. It was 10.02, it's 10.11 today. We can update this real quick. See, I don't know what the issue is with this. There we go. Okay, where did NSTB go? This is updated now as of the 10th. Yeah, so there is your updated post-merger market cap. $5.6 billion. What they valued it at, $4.66 billion. Equity value is going to be after this transaction completes with their cash infusion and whatnot, because it's going to get added to their balance sheet. So that's a more reliable number to go off of. That's 5.6 billion. This is trading slightly under there right now at 10.11. So if you agree with that valuation, the equity value, well, you got to agree with the enterprise value first in order for that to be the case. But if you agree with enterprise value, equity value will make sense to you also. And typically, I'm looking for this number to be 2 to 3 times the equity value is what I consider healthy. That's completely subjective. That's just my take on it. So that would suggest that you've got room to run if you like this. I think fintech is, they're a clearinghouse, so that's pretty big. This is their operating revenue, which is different than their total revenue. Estimated, they're doing, hundreds of millions of dollars a year. I don't remember if they're profitable or not. They've got a lot of pretty impressive clients. SoFi being one of them. Ally Investing is another. Stash, Orion, Webull, Titan. Pretty, eToro, pretty impressive list. These are their competitors. Here's a link to their investor presentation if you want to check that out. But I liked on STB Savvy. I didn't have something that made me say I want to go jump into an STB myself, because I need to use my liquidity in the companies that really, really stand out to me. So that's why I threw it into RMGB. That is going well for me so far. But yeah, that's why I put my money there. This one stood out to me the most. I can't stop talking about it, so it has to stand out to me to do that, or to have that impact on me. Let's see, they raised 186 million. Is that in US dollars or is that Canadian dollars? Second. Let's see there. IPO. 162 US dollars is what they raised, what I'm seeing here. 162 million, sorry. US dollars. Let's go back over there now. So if you add that here, and our liabilities remain the same, this number or outcome will do like a, I'm not gonna mess up the sheet because I don't want to have it calculate all this stuff and slow my computer down even more. I'm gonna have to figure out a solution because my computer's getting fried right now. Oops. So total assets in the current period were this: 0.71. Let's add on top of that all the money we just raised in our IPO over here, which was 162 million. Now let's take this and let's subtract our liabilities from it. $39 million. Minus 39,507,846.85. That's our total shareholder equity after the IPO, and then we're going to divide that by our total outstanding shares. Oh shit, well this number's going to go up as well, so I need to get a separate calculation going. Music will be back in a second. 363 300 812. And they IPO'd these shares at $27 a pop too. And it has since gone down to 21. It's only been like a couple weeks. This was for 6 million additional. which is nothing compared to their entire share pool. Oops. There's that. So let's divide it by their new outstanding balance. Of 369.812. That's going to give us a book value per share of 47 cents. We'll call it 48 cents. And then let's take that against the current stock price. So it's going to be 21.68 divided by 48 cents. That gives us a P to B ratio that's not in the 500s anymore, which is great. That's why these numbers are so, astronomical, because it's going off of their last filings, which are not up to date. They don't include their IPO in there on the balance sheet or anything. So, we're looking at a 45 here, which is still overpriced at $21. This number, it says the shares are worth 45 cents a pop. When the IPO is accounted for, so yeah. Not much better news. It's better than 500 and change. That's the only good news I can offer here. So we've done that. We've done NSTB. Let's see. SNDL. Or SNLD. Oh, we've done Sundial before. Alright, let's see if they've got anything public for us. Oh, they're based in Canada. Please don't. Oh my god. Please. Please, sir. No Canadian currency conversions. Job, are you still in here right now? Go look at my holdings real quick. Be selfish. Laser. I'm waiting for Laser's investor call. I'm really looking forward to that one. Open Door up another $2 today. Job, light Cetaphil. You guys should be chilling now. GME just zoomed down. Whoa. Hit 344 and now it's at 203. Yikes. Still up somehow. Tesla just took a dump. Tesla's down. Tesla just dropped $40. I'm on my guys at RMGB. People haven't talked about them yet. No, not. Oh yeah, RMG. Oh, we're up to 1046 a share. My warrant's got to be cooking. Got in there at 1002. Nah, they're not up that much. We're still out of money. 15% so far, though. Up 50% on GameStop. Up over 100% still on Open Door. Fantastic. JC, what's going on? How you doing today? I'm trying to find some information on Sundial over here. I'm not converting Canadian currency. JC, you missed it. I just spent so dang long converting all these numbers from Canadian dollars to US dollars for SCR. They're announcing their results on March 17th, it looks like. So a week from today, we're going to have their annual report. Yeah, the market started off real hot today, and then it just took a dump on us out of nowhere. But fortunately, my holdings are still somehow up. Open Door is up $2 almost. Laser is up almost $2. I wish. We're working towards wizard status. Alright, so we can't do Sundial, unfortunately. They don't have any reports for us to look at. Alright. This means it's time for a SPAC hunt. Let's go find some SPACs. Oh, can't stretch. Can't go hunting if you don't stretch. Those of y'all just tuning in now, by the way, please, 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 as always, smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every time we drop new videos and we are going live and making money up in here, which is every single day the stock market's open, folks. Also, I do need to depart today at 12:45 instead of the usual 1 to 1:30 timeline we work with. I got a call, after the interest we got yesterday. I set up a call between, with my dad and his compliance department. See if we can get him on here, because you guys spend your time, listen to an online marketer talk about stonks. That's great. None of this is financial advice, but I think it might be useful for y'all to talk to a real life financial advisor, like y'all said you were interested in. He's been doing this for over 40 years now, so he is a wealth of knowledge. So I'm going to see if we can get that approved by compliance. And if we can, we will get him on here. We'll plan something for him to come on here. I'll let you guys know. MOTN. Oh, I need to update this. By the way, I know we talked about it briefly yesterday. Tonight, as mentioned, we will be doing our usual Wednesday night clubhouse at 9:15 Central Time, talking about Japan's lost decade, stemming from the 1980s, where it was just a party, going from 91 to 2001 is what they considered to be their lost decade. Very similar things we see today that were happening then in the 80s when Japan was booming. Not to say that we're going to go through the same cycle they've gone through, but they haven't. We'll discuss this in depth, but they haven't grown at all. GDP wise, it just hit the sheets in the last couple of years now that they've grown 0.1% in their GDP over the past 30 years because it's been that small and it's been self-induced. So we'll talk about what caused that. We'll talk about some hypotheticals, what we're seeing similarity-wise in the economy today. I'm going to try to post it on YouTube as well for anyone who's unable to attend, but no promises there. It's something that we're still working on. Scott, favorite, what's going on, brother? Hope you got a good pump in. This one's getting voted on today. That was yesterday. Oh, no interest there. Speak about most adoptions in Japan are for 18 to 25-year-olds to their daughters. Confused with that, Savvy. What do you mean by that? This is more LiDAR. I don't want your LiDAR. I've already got my LiDAR play. Yeah, that's something that I just saw last night. Actually, I watched a documentary on it, just kind of study up for today. Want to be prepared. What Japan struggles with is their birth rates are very, very low in the country, but the age that people live to. Yeah, exactly, Savvy. The age that people live to is the highest in the world from what we see. So their birth rates are super low, so you're not getting a bunch of new people who are, adding production to their economy, but they're living super long, so these people are becoming a burden to their economy or to their country because they can't, you know, enhance their production. They can't add it to the workforce, or the labor force. All they can do is live off of whatever means they acquired, and they have to live off the state too. So, you're not getting enough people who are, replacing the people who can't work anymore. Um, and yeah, it's just not. It's a bad situation over there still, but it's all self-inflicted. They're the people who are their central bank system refuses to inflate the yen. That's been, that was ultimately what happened. Is they blew this massive bubble up, and then the person who blew the bubble up is the same person who popped it. They thought deflation was the answer, but because their land became super high in price, so the wealth gap grew too large, so they popped the bubble and tried to deflate their currency. Stopped, bailing out with actual new money that they're printing. They started bailing out with existing money. Whole debacle. I don't want to go into that too much right now. We'll talk about it later, but yeah, it was a just absolute fucking mess over there. Still is. Yeah, those pod hotels are actually pretty dope, though. I'm actually very fascinated with them and would love to go Payoneer if anyone's in there. That's big. Um, I would love to stay in one of those pods, whether it be in Japan, Vietnam, as we're seeing it now. Really cool concepts, and they're making them like futuristic now. So it's not like you're just like sleeping in a box, like you're in a box, but you've got like I don't know. I've seen some really cool ones on YouTube. All right, so we don't have anything that's been announced today in talks. Okay, okay. All these people just had definitive announcements. Okay, let's look at this one. We've looked at TSIA. This one that's my baby right there. RMGB. Get in while you can, folks. Berkshire Grey, we've gone over. Assuming this is going to be another fintech play. OppFi, Hyzon. I don't think we've gone over that. I don't think we've gone over Hillman. We've gone over Matterport. We've gone over something that's interesting. We've gone over IonQ. FTOC is Payoneer. I like Payoneer when I went over it. I don't know, any of these stand out to you guys? Which one of these do you prefer? If you don't prefer anything, I can just pick, but I don't want to do another fintech one just because we've been doing fintech so much recently. Well, it's IPOE. We just did that one yesterday. Yeah, that's massive, Savvy. We might just start here or Taboola. Let's just do that. Let's do a like RBAC. Which one's RBAC? What? The Red Sox? No, that can't be right. Okay, so there's no definitive agreement yet. We can do RBAC as soon as there is an agreement in place. I don't really have much to do until then, unfortunately. Okay, let's do this one. So this was what? WPF, okay. Are they merging with the Red Sox for sure? Can you send the investor presentation if so I can do that one next? I can look that up I can look it up next as well if you can't find it. they got a lot of reasons in here as to why they think they're worth a lot of money. Okay. Let's see. Enterprise values, they have their firm value because it's going to combine fully the fund taken on public, so that's Bill Foley's fund, Blackstone, and then a light are all going to be partnering to drive a ton of value. So this is what they're perceiving the enterprise value to be, which is higher than the equity value, which is not what you're never going to see that ever again, probably. But I'm not saying their basis is wrong, just unique, trying to understand it. All right, what are we getting? The pipe is getting a lot here. We're getting interesting. Interesting. Okay. We're actually getting a lot here. So looking at 19.2 is what the public fund is that you're seeing today, and then they're doing 5.6 for their own shares, and then for their sponsors, I'm assuming that's going to be Blackstone probably, it's going to be 4.3%, so that's going to be 9.9% in addition, giving us a current market cap, or a post-merger market cap of only $4.5 billion. So this one would be, well below the equity value, well below what they perceive the enterprise value to be. Enterprise value here might be what you want to base this one off of, just because they are bringing in Blackstone and they've got their own, companies that are assets of theirs that they can use in conjunction with a light, and then same with Foley. Step a little bit further though. PaySafe is a sponsor here. I like PaySafe also. Let's see what their revenue is. Let me see. Well, let me put this, well, I've got it fresh. Actually, no. We'll go in order. Financial overview. This is actually a pretty strong company that's not going. This is what I'm talking about, guys. There's so many people who have shiny object syndrome in the market right now. They see Tesla. They see the space companies. They see the EV plays. I'm not saying they're bad plays, but they're the ones who are getting all the attention. GameStop, you could add to that list. They're sucking all this attention away so that all these really, I mean, this is a pretty good company for what I'm saying. They have really strong backers. They've got really strong acquisitions they're attempting to pursue. They got really strong partnerships. They have a really strong and experienced management team. So these are all things you're looking for in a strong company, and they're currently, undervalued. No, don't worry, Savvy. You've got some time. I can help you in this pursuit if need be, of a Red Sox investor presentation. Did not think I'd be saying that coming into today. That is for damn sure. But this is a really strong company, has not moved at all since this deal has been announced. Not sure when they're voting to finalize things over here, but you're getting a pretty darn fair price there where I'm actually considering going out and buying warrants. I got to see what the rest of the numbers look like, but they've got a lot going for them, and these are the kind of opportunities that we go SPAC hunting for. That's where we can kind of lever up the easiest. Warrants are going to let us lever up with, less risk than options do and less risk than margin involves. If you know what you're doing, do your own research. I'm not a financial advisor. I'm an online marketer. Disclaimer. But they got a lot going for them, and no one's talking about them. Everyone wants to talk about space. Everyone wants to talk about GameStop, Tesla, EVs. I'm sick of those. Those ones are so overvalued at this point. Yeah, I think they're the future, but these companies are the future too. I've been saying it for over a year now. Healthcare is ripe for disruption. 47 shares, very nice. Healthcare is ripe for disruption, folks. These prices you see nowadays are no more. And I'm starting to see that with the new health insurance I got this year. Instead of paying $450 a month, I'm paying under $100 a month now as a self-employed person, fully healthy, just as healthy as I was a year ago. Young, no pre-existing conditions. And when I was on the highest plan with Blue Cross Blue Shield, I was still paying for prescriptions. I was still paying for allergy pills. I was still paying, a little bit out of pocket for doctor visits, which is absurd for me paying $450 a month. That's not a lot compared to some people have pre-existing conditions. I get that too, but it's so ripe for disruption. And this new plan I'm on, it's under $100 a month. Doctor visits completely covered. Prescriptions completely covered. Allergy pills are even covered on it. I don't pay anything out of pocket, and that's just like an indicator that there are so many more companies like that one that I'm on right now. There's companies that are looking for B2B solutions like this one, Alight. Clover is another healthcare one. I don't know. I haven't looked into Clover honestly too much. I'm not invested in it. That was one of the small plays I kind of just brushed aside. But this industry is so ripe for disruption, and no one's talking about it, and it's a much nearer future than any of these fucking space companies are. AHAC. Not sure if I'm going to have a chance to get 2 of those all today, Savvy, because I got to run it in 30 minutes. But I will put those on my radar now. Thank you for bringing those to my attention. All right, let's see what our actual revenue was reported. 2019. This is $2.6 billion. Oops. And a lot of these are subscription based too, which is great to see. That gives it intrinsic value where you can bank on that money being there a year later. This is 2019's numbers. Very impressive. Of that, a little over $2 billion for subscriptions. So if that tells you anything. Also get 2021. It gives us 2021, 2, and 3. We're gonna do 2720. We're going to do 2909. And we're going to do 2225. So they're growing fast. Look at the market cap you can get at. That's the value of the company currently. They're projected within the next 3 years. You don't have to wait 10 years to see revenue like these space companies, guys. We're going to go through a crash at some point within the next 10 years. So I'm going to probably scoop some space companies at that point. That's my plan, at least. Maybe I'll pay a premium. Maybe I'm wrong. I'm not trying to time the market. I'm just using my money elsewhere, for nearer future plays that are getting overlooked. Currently valued at $3 million. I'm sorry, $4.5 million based on the price today. Kathy Woods in them. Awesome. Thank you, Savvy. You the man. Valued at $4.5 billion, projected to grow to $3 million plus in revenue, $3 billion plus in revenue within the next 3 years. Look at the other companies in the sector; they're trading at at least a 6 times multiplier of whatever their annual revenue is. So this could easily be a 400-500%er for you. That's why I'm really enticed by it right now. And it's got an intrinsic value. It's a subscription model. There's a lot of great things with this company. Sorry, I'm excited. I just saw this one just now. I'm finding these. We're hunting together. So I'm finding these with y'all. So we're starting in 2019. We're at 2.6, so we're at 26.41. By 2023, we're going to grow to 32.35. That's 21, 2, 3, 4 years. Gives us a CAGR, probably going to be pretty conservative, if I had to guess, of 5.2%. That is a very conservative growth rate that I'm very confident in them being able to achieve, especially given the partnerships that they're adding here, given the backing that they're adding, and what these funds have in their portfolio and their holdings. Blackstone and Foley are massive, and they've got so many plays that can attach to them to where it's, I think this is going to be a home run. I'm probably investing today. Probably. Or next week at the very least. This is 2019 to 2023. TAM. Let's go find that one. Are they profitable? It doesn't really matter to me, honestly. This is ADP, competitor. We'll find that TA in a second. Like I said, guys, you can look back. I promise you. 3 months from now, I'm going to go ahead and I'm going to clip this clip from YouTube, throw it back up there. Told y'all 3 months ago, we found it here live. You guys had an opportunity to get in before anybody else did because they were all consumed with the companies that ain't that great, realistically. They might make some short-term gains. Don't let that distract you. We're in this for the long run. We're investors. We're not traders over here. We're not traders and we're not traitors. Unless it's GME. I'm trading that one all day. Investors, maybe this. This fully. And all the other competitors are trading at a PE ratio about double of what they are at the time of this coming out. Let's see, appendix. Okay, great. Let's see our money coming in. Yeah, exactly. That's a beautiful strategy to have, Savvy, because if the market does go south, because we never know when it's going to go south, when it's going to stay south. It could go for 08 was a relatively quick recovery for such a big crash. That recession was pretty large compared to most recessions would go through, but it took 4 years to recover there. That's pretty quick. Japan's been waiting 30 years now, just because it's self-inflicted. That's what happens when you mix capitalism. When we thought they were capitalist, we went in there after we won the war. They surrendered, got rid of their emperor. He was hanged, and then we went there and we basically just redid their culture altogether. It's kind of fucked up, honestly, when you look at it, but these people, they love Americans over there. They have they had so much more opportunity, at least, you know, in the 80s when things were booming. They were projected to overtake us as the world's leading economy. Theirs has taken 30 years now to recover. They increase their GDP by 0.1%. But we taught them how to be capitalists. You had to handhold them. They didn't know at that time how to do anything. Everything was done for them. They were taught how to think by their emperor. But they had a free market, and they were telling their banks where they needed to loan money to. They were deciding who the winners were going to be, and you can't do that in free markets for it to work. All right, total revenue 2.5 billion in 2019, estimated for 2.7 billion in 2020. Let's see what they turned as they give us a net income or loss. They do. Nice. 2019 on 2.5 billion, they profited 22 million. Do you have a drip set up too, Savvy, I'm assuming? Yeah, interest rates we gotta look out for. That raises the party's over. At least that's my take on it. I was asking if you have a drip set up for your dividends to be reinvested into your portfolio, or if you're just taking the dividends as like a cash payout. I'm looking for TAM right now. Yeah, so Bill Foley's got a pretty impressive portfolio of companies who he's taken public or acquired in some form, and what they've done since he's acquired them. It's actually very impressive. Um, wow. Fidelity he acquired in '84 for $3 million. They are valued at $11.7 billion at the time of this portfolio, or at the time of this presentation. FIS FinTech acquired in '06 for $2.5 billion. They are worth $81 billion today. Black Knight acquired in 2015 or took it public through IPO in 2015. $1.6 billion. They are valued at $13.4 billion. Ceridian IPO'd in 2018 through them. $4.2 billion. Now they're at $16 billion. So that's 4 times what you could have gotten in for in 3 years. Dun and Bradstreet IPO'd or LBO'd in 2019 for $2 billion, $10.6 billion at the time of this presentation. Very impressive track record for Bill Foley. There you go. Savvy doing savvy money things. I don't see their TAM on here. Alright, sorry y'all, I am struggling to find their TAM over here, which is the last thing we need. That's a great point. Anyone who's in here, take some notes from Savvy. He's preaching. He's preaching truth. $20 billion in TAM added, okay. Oh, JC, you're awesome. Never change. I like this company a lot. I just can't find their TAM. I've seen pretty much everything I need to go pursue it a bit further and maybe pull the trigger on it. Here's your total addressable market. Dollars. So they're saying healthcare spending. It's in the trillions for sure. I'm going to put something really high, and it's not going to be great for 11.8, $12.1 trillion. We can do it. I'm going to do it. Alright, I'm not going to have time to get to it, sadly. I'm going to do a quick search and see if we can find this Red Sox investor presentation, if it is out. If not, it's no hair off my back, you know. So, let's do that. Oh, this is, I don't know if this is different than what you're seeing, Savvy, but they're saying that the pursuit is over. I am going to depart right now, my friends, just because we're not going to have time to get to anything else today, unfortunately. No, we're cutting off early. We will be back to our typical schedule tomorrow, and then Friday I've got a little shake-up also, just because I got a date, honestly, in the morning. Not a big deal. With my barber. So I will be seeing them at 10 a.m. Central. Should get to the office around 11:30 or noon. So I'll go live as soon as I'm here. Um, if you have any questions for me while I'm not live, you know exactly where to find me. If you haven't already, you can head over to my website, growthsaloon.com, to get access to the spreadsheet you see me working on over here, so that you can access it whether I'm live or not. You can do whatever you want at your own leisure. If you need help setting that up, just message me in the Discord. I'm more than happy to take care of you. Add me as a friend so you can private message me in there, and I'll answer every single private message I have in there. Or if you don't want to do that, you can always connect with me on any of my socials. They are in the link in the description below through my link tree. If you want to join our clubhouse tonight, we'll be having our discussion starting at 9:15 Central Time on Japan's lost decade. We'll do the prelude starting in the 80s, how it was a party over there. Pretty comparable to what we're seeing today. And then we will, expand into what took place since then, 91 to 2001 specifically. And the effects are still lingering today. So that's what's coming up tonight. Link is in the description below as well. Other than that, good luck to y'all the rest of today. I'll let you know how the call goes. Hopefully I can get a financial advisor on here for y'all to, ask questions. Someone actually qualified to answer them. I'm an online marketer. I'm not qualified for that legally. So other than that, y'all have a great rest of your day.